All right, so I think we're on. So I finally figured out what was going on with the website. Then had another argument with my little sister concerning this. So now I'm ready. I was trying to wait until everything was finalized from the perspective of the Congress.gov website, but I've been getting a lot of calls and stuff like that, so I just want to speak on this real quick. What you're looking at right now is the CARES Act for 2020. This is the bill that was reportedly signed on Friday. Now, the Congress.gov website has not updated this yet, so as far as I know, it's still not law. So until I show here that it's become law, for me, it's not law. I'm not going to do anything about it. I don't listen to, Yahoo News or whatever, right? I don't pay attention to it. I've been looking at this for the last couple weeks. I want to show you what the difference is. This is the Families First Coronavirus Response Act. This became public law 3/18/2020. Okay, this is law. Now, the Families First Coronavirus Response Act basically made payroll tax, non-existent for the first quarter of 2020. Not the entire quarter, though. Okay, just stay with me on that. There's still some math in there that'll need to be worked out. But basically, you don't have to pay payroll tax for sick pay for the first quarter of 2020. What that means is if you W-2 yourself, you simply pay yourself sick pay. You will have to pay federal tax on it, but you don't pay payroll tax on it. So that's a huge, huge a plus. I think I mentioned before, if I didn't, I'll mention it here now again. If you were affected at all by COVID-19, if you lost even 1 hour, if you lost $1 of income, file for unemployment. If you are self-employed, depending on your state, you'll need to file at least 2 quarters of unemployment payroll taxes and pay the unemployment payroll taxes in order to be eligible to file for unemployment. But they are extending the unemployment in states with more than 10% of unemployment to 26 weeks. That means possibly being on unemployment for almost a year. So we're talking about $400, $500 a week times 8 months maybe for paying just a little bit of unemployment tax on the back end. So a very good thing to look into. Again, if you're a W-2 employee, I don't care if you're employed now. If you lost even an hour of labor due to COVID-19, apply for unemployment. Apply for that 1 hour. They can only say yes or no. Okay, so again, just real quick, want to make sure everyone understands this is the Congress.gov website. This is where all the bills, all the laws get made. Okay, you can go here, you can read everything about it. I'll do my very best to remember to paste the link for these pages on the video. So again, this is the Families First Coronavirus Response Act. Not going to go into this one in much detail, honestly. It's not a whole lot here. But there is some good stuff, okay? The Emergency Sick Leave Act, we all know about that. Employers were mandated to give their employees 2 weeks of sick time, okay? And then, like I said before, you get tax credits for paid sick and paid family leave and medical leave. So again, if you are self-employed, if you simply pay yourself, okay, sick pay, or if you can figure out FMLA, okay, for yourself, then you get tax credits for that income, okay? Now, the purpose of this video, what I was arguing with my little sister about, is the fact that, number one, like I said, this has not become law yet as far as I'm concerned because it has not been updated on the site, okay? I'm going to refresh it just to make sure, okay? It is 6:15 HST time. And so, yeah, see, so it's not been updated. So, but let's go through it real quick, though. So I want to show you what all the hubbub is about. And I think I missed oh no, I didn't. Okay, all right. So we're gonna skip all this stuff, okay? And we're gonna go directly to the 2020 recovery rebates for individuals. Now, when I saw rebates, I already knew something was weird about this. Okay, this is what it says. In the case of an eligible individual, there shall be allowed as a credit against the tax imposed by Subtitle A for the first taxable year beginning in 2020 an amount equal to the lesser of net income tax liability or $1,200. Okay, so what that means to me is that if your tax liability, okay, was less than $1,200 for the first taxable year beginning in 2020, then you get less than $1,200. Now the question becomes is how do they know what the tax liability is for the first year beginning in 2020, for the first taxable year beginning in 2020? Well, the only way you're going to know that is by filing a 2020 tax return. So this leads me to believe that what's going to happen is, and the way this is set up, is that they're giving you basically a refund of the tax that you're currently paying right now. So what's happening is you're paying taxes right now to the federal government, right? Well, they're going to go ahead and give you that money now. And the idea is that in 2020, you will have, I'm sorry, in 2021, when you file your 2020 tax return, you will have already paid that money to the federal government, and you'll just file as normal, right? Because you've already paid it, and they're not taxing you on this extra $1,200 they're giving you, so it's all a wash. Like, it's easy, right? My concern, though, is that what happens if you receive a $1,200 check today in April of 2020, and then when you file your tax return in 2021, you have a tax liability of zero. Well, if your tax liability is zero, then now you don't get the $1,200, and the question is, are you going to have to pay it back? Now, I want to read this again, okay? It says, in the case of an eligible individual, there shall be allowed as a credit against the tax imposed by Subtitle A, and we'll look at Subtitle A here in a second, for the first taxable year beginning in 2020, an amount equal to the lesser of net income tax liability or $1,200, and of course, $24 in the case of a joint return. So let's just go down this and we'll come back to it. The amount determined under subsection A, which just so everyone understands, this is subsection A, okay? All right. So the amount determined under subsection A shall not be less than $600, okay? So what that means is even if your tax liability is zero, it will be at least a $600 check, okay? All right. The amount determined under subsection A after the application of subparagraph A, which is this one, okay, shall be increased by the product of 500 multiplied by the number of qualifying children, okay? And so what this means is that if your tax liability is zero, and let's just talk about how you get to a zero tax liability. Well, we all understand child tax credit, right? So let's say you make, I'm just going to throw some numbers out there, okay? I'm not going to get detailed with this, okay? Let's say your income is, 30 grand. All right, and let's say that you're a single, head of household, whatever. Well, it has to be more than 40. Crap. Okay, let's say your income is 50 grand. Yeah, 50, 40, 45, $50,000. Okay, all right, let's just say that. Okay, and you have one child. All right, so we subtract 18,350 from the 50 grand. That leaves you with something in the neighborhood of 32,000, right? $32,000. The tax on that is going to be 2,000 and change. Right? Okay, but your child tax liability takes 2,000 of that away, right? So now your tax liability is only like 100. See my point? Okay, so what they're saying is that the tax rebate is going to be the lesser of net income tax liability or $1,200. Okay, so let's just say your tax liability is $100, so you're going to get $100 tax rebate. All right, and then if you have one child, then it says the amount determined under subsection A should not be less than 600, right? Okay, and the amount determined under subsection A after application of subparagraph A right? Shall be increased by the product of 500. So now you have a tax liability of $100, but you get at least 600, and now you're going to have another $500 increase to 11. All right, now here's the problem with this, okay? It is now March 28th of 2020, okay? All right. If they're basing the number of children on your 2018 tax return, then that's fine. But everyone understands that the children on your 2018 tax return may not be the children that you're taking care of in March of 2020. Now, I'm not a genius. I'm not very bright. If you guys have some help with this, maybe you can help me with this, okay? Because like I said, I've been reading through this stuff, and I'm still, like I said, it hadn't become law, so I haven't really been bothered because I know it can change. So I haven't been bothered about it too much, but I've been looking at it, right? So let's say in 2018 you had 2 children. Okay, that's 2018 though. That's 2 years ago. Okay, all right. You filed your 2018 return in 2019. Just because you have children on your 2018 tax return does not mean that you still care for those children, that they still live with you in 2019. Okay, all right. Everyone understands that. I can't be the only one, right? I mean, clearly the IRS and the congressmen and all these people who wrote these laws know this. They have to. There's no way that they don't know this, right? Okay. So in 2020, it's March 2020, on my 2018 tax return, let's say I had 2 children. There's no reasonable adult with any sort of sense, right? Any sort of education, any sort of anything, is going to assume that the children on my 2018 tax return are the same children that I'm caring for in March of 2020. Okay, all right, so let's back up a little bit. Okay, so what if I filed my 2019 tax return already? Okay, all right. So the 2019 tax return is not due. It's not due until April. If I file an extension, it's not due until October. And then they increased the filing deadline to July. And so that's one of the things that I have not spoken to the IRS about, but I'm going to make that call on Monday for sure. Because there's a lot of due dates that we're just going to have to figure out, seriously. But my question is, I file extensions for all my clients whether they ask me to or not. I just immediately do it. If I have your information from last year, I file an extension for you this year. No questions asked. So if you've already extended it to July, and then we have an automatic extension already on the books, does that give us another 6 months? I don't know. But anyway, I digress. 2019, if we go on 2019 tax return, I have 2 children. In 2019, though, and so the rule is they have to live with me for more than 6 months out the year, right? And I have to pay, more than 50% of their food, whatever. Okay, but that's 6 months of 2019. It's March of 2020. So, but you're giving me a rebate for what happened in 2020. No one is going to assume that because I cared for and children lived with me in 2019, that they also live with me and I care for them in 2020. There's no way that the people who sat in a room together and constructed this thought that. There's no way, right? They have to know that they can only rebate for the children now in 2020. But how are they going to know what children are there? I think it's going to be based on the 2020 tax return. The problem is, though, is that they're going to give you the check now, and then you're going to file taxes in 2020. And if the information don't line up, I think they're going to want you to pay the money back. I mean, Obamacare worked the same exact way. I actually did a video on Obamacare a couple weeks ago, and believe it or not, the thing didn't record. So I sat here and did the whole video, and ended up with nothing. So I have to go back and do that one again. But this is really similar to that though. And like I said, they're calling it a rebate. You have to understand. So rebate. A refund is something after you pay. Okay. That's why it's called a refund because you paid it and now you're getting a refund, right? But a rebate is a discount. A rebate is a discount. It means you haven't paid it yet. It means that I'm giving you a discount on the amount that you already owe me. Okay? So I think this is going to be based on the 2020 tax return. So what that means is if you somehow apply for this, and again, I haven't seen anything, I haven't read anything on how to apply for this. Okay? If they're basing this information on a 2018 return, if they're basing this information on a 2019 return, what does that have to do with 2020? Nothing. So I don't know. I'm going to stay on top of it. I'm going to keep looking and to see where we're going. All right. So a taxpayer, right? We have to describe what a taxpayer is. A taxpayer is described in this paragraph if the taxpayer has qualifying income of at least $2,500 or has net income tax liability which is greater than zero and gross income which is greater than the basic standard deduction. All right. Now, that's another issue. Again, what are we basing this on? Are we basing this on a 2018 return, 2019 return, 2020 return? What I'm going to do real quick, and I know this is probably unprofessional, whatever, but I'm just curious for myself. Since each individual who was an eligible individual for such individual's first taxable year beginning in 2018 should be treated as having made a payment against the tax imposed by Chapter 1 for such first taxable year in amount equal to the advance refund amount of such taxable year. So each individual who was an eligible individual for such individual's first taxable year beginning in 2018 shall be treated as having made a payment against the tax imposed by Chapter 1 for such first taxable year in amount. So maybe this is going to be an amount equal to the advanced refund amount for such taxable year. The advanced refund amount is the amount that would have been allowed as a credit under this section for such first taxable year if this section had applied to such taxable year. The Secretary shall, subject to the provisions of this title, refund or credit any overpayment attributable to this section as rapidly as possible. No refund or credit shall be made or allowed under this subsection after December 31st, 2020. There's no interest on this stuff. In the case of an individual who, at the time of any term may pursue, has not filed a tax return for the year described, may apply such paragraph by substituting 2019 for 2018. Okay, so if you have not filed a return for 2018, then they're going to use 2019. No credit should be allowed under this section to an eligible individual who does not include on the return of tax for the taxable year a valid social, of course. In the case of any qualifying children. So everyone has to have a valid Social Security number. That's going to really come into play when you're talking about people who have I-10s, a lot of Hispanics. Maybe the wife has a social in 2020, but she didn't have one in 2018 or 2019. Mirror code possession. All right, so it looks like 2018 is what this stuff is going to be based on, right? 2018 return. If there wasn't a 2018 return file, they'll use 2019. But again, it doesn't make any sense. Any failure to so reduce the credit should be treated as arising out of mathematical error. Regular tax liability and the tax imposed. The credit's allowed. Okay. The credit allowed by subsection A shall be treated as allowed by subpart C of part 4 of chapter A, chapter 1. I have to go back and look at that. All right, so let's go down this list real quick here. It's 2018. Not going to worry about that right now. The taxpayer may elect not to have applied for maintenance. Okay, that's net operating losses. Come back to that another day. Shall apply to taxable years beginning after December 31st, 2018. The amendments made by this section. Okay. Qualified improvement property. Okay, so it must be the installments not to prevent credit or refund of overpayments or increased estimated taxes. So that's what it looks like. 2018, if there are children on your 2018 tax return, then you will get a credit for 2020. I guess if your children were not born in 2018, there's no credit for 2020. Um, Again, like I said before, it sounds really wacky to me. And like I said before, I have not seen or heard or read anything that talks about how this is going to be implemented. It looks like the IRS is going to be involved, but the last time I spoke to an IRS agent, which was Monday, she said that there had been nothing at all been said, been done, nothing. So that's it. I guess, of course, like I said, I'm going to stay on top of this, and I'll update as we go. But I just wanted to put that out there for now, because everyone says check, 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 check. Well, yeah, it's possible, but how it's being done is a little weird. But yeah, so the other thing I want to talk about, just real quick, is the loan forgiveness. This is something that I've been working on for the last couple of days. Still not entirely sure how it's going to work, but something that I have to figure out. Now, this is a loan for payroll. Okay, so if you are self-employed and you W-2 yourself, it's important that if you W-2 yourself, right, then this can be you. Okay, so you can get a loan to pay payroll. The payroll cannot be more than $33,000 for the first quarter of 2020. Okay, and they did that because they're trying to come up with 100,000 for the year. Clearly, right? Okay. Qualified sick leave wages for which a credit is allowed under Section 7001 of the Families First Coronavirus Response Act. We've already talked about that, right? So if you get a loan to pay the qualified sick leave wages, okay, then you don't have to pay that money back. It says forgiveness. An eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in amount equal to the cost of maintaining payroll continuity during the covered period. Now, how this stuff is being forgiven is what we need to look at. Here we go. Reduction based on reduction in number of employees. All right. So the amount of loan forgiveness under this section shall be reduced by the percentage equal to the difference obtained by subtracting the quotient obtained by dividing the average number of full-time equivalent employees per month employed by the eligible recipient during the covered period by the average number of full-time equivalent employees per month employed by the eligible recipient during the period beginning on March 1st, 2019 and ending on June 30th, 2019, or in the case of an eligible individual that is a seasonal employer. We don't need to go through that. So the average number of full-time equivalent employees shall be determined by calculating the average number of employees for each pay period falling within a month. Okay, so we're talking about just one and one right now, right? Reduction relating to compensation. The amount of loan forgiveness under the section shall also be reduced by the amount of any reduction in excess of 25% of compensation in the most recent full quarter in which the employee was paid in compensation during the covered period of any employee who was compensated in an amount less than $33,000. Okay, so let's look at this again. The amount of loan forgiveness under the section shall also be reduced by the amount of any reduction in excess of 25% of compensation in the most recent full quarter. So the most recent full quarter is going to be the first quarter of 2020. Okay. So any reduction in excess of 25% of compensation. So we're talking about 25%, or maybe this is talking about the December quarter, because if this begins on March 1st, this is in the middle of the first quarter. This isn't the end of the first quarter. The end of the first quarter is not till March 30th. So the last full quarter will be the fourth quarter of 2019. So the excess, so what they're trying to do is they're just trying to limit how much you can pay yourself and pay your employees sick pay. So 25% of the compensation for 2019. So if you made, let's say, $1,000 in the fourth quarter of 2019, then any amount above 250 is not going to be forgiven for the loan. Luckily for me, I pay myself at the end of the year every year, so I think maybe this will work in my favor. 25% of my total year income. It's not bad. But I think this is what this is saying. So it looks like there's no way for you to get it fully reduced. I mean, not fully reduced, but fully forgiven is what it looks like. Again, still looking into this, still trying to figure it out to see if there's a way to get it 100% forgiven. But right now, it doesn't look like it can be. So all this stuff is just loans, right? All of it is loans. The loans are available. You can get the loans, but the loans have to be paid back, right? An eligible recipient seeking loan forgiveness under this section shall submit to the lender that originated the covered loan application, which shall include documentation verifying the number of full-time equivalent employees on payroll and pay rates for the periods. Well, of course, payroll tax filings reported to the IRS service. So, including payroll tax filings. So again, that's just your 940 unemployment, 941, right? State income payroll, and because of course they want you to pay this state unemployment, right? Financial statements verifying payment on debt obligations incurred before the covered period. So this is going to be debt obligations. This is going to be loans that you incurred before the covered period, and any other documentation that they deem necessary. And my advice is always never give too much information, only give them what they require. So this sounds like, in case of audit, right? Whatever information that they want. An eligible recipient receiving loan forgiveness under this section shall make a good faith certification that the uncertainty of current economic conditions justifies the loan request to support the ongoing operations of the borrower, and acknowledges that funds will be used to retain workers and maintain payroll. No eligible recipient shall receive forgiveness under this section without submitting to the lender that originated the covered loan the documentation required under subsection E. And going back, subsection E is what? Payroll taxes, state income, unemployment stuff, and then financial statements. This one is kind of weird. Financial statements verifying payment on debt obligations incurred before the covered period. So I'm not quite sure why they want this. I think this is before the covered period. I'm not sure. I have to look more into that. Canceling indebtedness under this section shall be excluded from gross income. So again, it's free money, but it doesn't look like it's going to all be forgiven. It looks like you will have to pay some of it back. So for now, that's it. Like I said before, more to come. I will definitely keep myself and everyone else abreast. I will be uploading this to YouTube as well. Also started using Anchor, which is an audio version of this. So that'll also be available. Not quite sure what platforms it'll be on, but that's out there as well. From me to you, I'll holler.